What's up, guys? Ricky here, True Trader, ready to get another Sunday prep poppin'. This one is cooked up nice. It ain't no delivery, it's DiGiorno. So I hope you brought your appetites. Hope you had a great weekend. Hope you're ready to have an even better week. This is September 26th. It is the Sunday prep. Now, make sure before we go any further, please subscribe to the YouTube channel and turn on the notifications so you don't miss content like last week's midweek watch by the Goose. Not only were the ideas spot on and made a lot of people a lot of money, there was even a giveaway in the middle of the video. You could have won a free True Trader backpack as well as 1 month of free access to the TrueTrader.net community. So also leave some thumbs up if you like it, thumbs down if you don't, but comment. Last week somebody commented, they said that my videos constantly have like this high pitch noise in the background. Well, guess what? Got a new microphone. So hopefully that problem is taken care of, and hopefully what you are seeing is that your feedback turns into immediate benefits for everyone, right? So if there's something you want to see, something you don't like, let us know, because we are listening, guys. All right, so last week I put out a tweet that was linking to a gent's video, his YouTube video where he spoke at a trading conference in Europe. And the whole content of his speech was centered around trading psychology and why, if you do what everyone else does, or you always act on your intuition or like what you instinctually think is the right decision to make, why you're always going to have terrible results. I mean, we all know that most people lose money. So if you want to not be like most people, you should probably figure out what it is that they're all doing and make sure that you're not doing that, or you're doing the opposite. You need to be constantly reviewing your trades. You need to be journaling. You need to look at what's not working and realize that what's not working will continue to not work. You must change. You can't just keep doing the same shit over and over and over and think all of a sudden one day you're going to wake up and it's all going to click. It's not. You must figure out what it is that you keep doing that's not working and change it. You have to. And again, I have no affiliation to this guy. I don't benefit at all if you watch his stuff. I just really thought there was a lot of value in it, and so I put it out there. I mean, we've all been there before, right? We've all been that person that sees a trade that we think we want, and if it would just pull back, and it's not pulling back, and then you lift the offer. And what happens immediately? Regret. Not only regret, but like your fingers also immediately on the sell button too, because you realize that your entry on that trade was a complete mistake. Well, guess what? Those people that make those decisions are exactly who you want on the opposite side of your trade. If I'm shorting something, the people that are buying it, I want them to be acting at peak emotion or peak irrationality. They got to be shorts that are getting squeezed out and longs that are just scared to death they're going to miss this trade. And this, vice versa for like buying flushes, right? I want the people selling it to be completely emotional and not making objective, rational decisions. And that's why I love True Trader so much. If you guys are in the community already, great, you know what I'm talking about. If you guys are outside looking in, wondering what it is that they do over there, we take advantage of emotional, irrational moves, and we revert them back to whatever mean it is that we feel is where that stock is going to go back to. And that's the edge. The edge is a psychological, emotional edge. Speaking of emotional and psychological EQ, this Thursday, episode 4 of Method and Mindset with me and the Wall Street coach, Kim Ann Curtin. These have just been getting better and better and better. They're every other Thursday, right? So we didn't have one last Thursday. We do have one this Thursday. And, you know, it's at TrueTrader.net's Instagram channel. It's not on mine. It's not on Kim's. But they are amazing. And, you know, the guests that we've had on have been given access to True Trader, and we've interacted with them. We're helping them grow, and it's amazing to see results actually coming to fruition. So it's given me a whole lot of fulfillment. I know it makes Kim Ann Curtin over the moon too, to know she's helping people. So make sure you tune in. Also, methodandmindset.com. We set up a website with over 7 hours of free content. Just go over there and watch it. There's psychological content. There's technical content. Go get your fill. That's all I have in the notes, guys. So before we go any further, as always, I have to do the disclaimer. So real quick, bear with me. Neither I nor TrueTrader or any of its affiliates are registered as security brokers dealers. I am not a licensed financial advisor. Make sure you understand that anything you hear me talk about today on this Sunday prep is not a solicitation to buy or sell a stock. Trading is risky. You guys got to understand those risks. Make sure you understand that anything you hear come out of my mouth is only for entertainment purposes. That's it. All right, so first things first, guys, let's do our broader market analysis. And here we have the the S&P futures contracts. You guys can see we finally did what I've been talking about for maybe a month or so in these Sunday preps, and that is we broke the low of the previous month. It's something that hasn't happened in over a year. So as I said, well, I might as well put a monthly chart up if we're going to talk like that, right? There you go, guys. You can see we took out August's lows. Now, yes, we reclaimed them quickly, and as I said, it's not, the only red flag I need. It's just one red flag in a whole line of red flags that will start accumulating before I go into panic. And it's never really panic mode, right? It's just protect your capital. That's always rule number one. Protect your capital. But we don't need to turn into bears just because we broke August's lows. It's just one red flag. So let's go back to the daily, and as you can see, right, we broke this big trend line. It's okay, but we are popping back up, and as we said, it's not the pullback that matters. It's what happens afterwards. Do we push up and reclaim all-time highs and continue the bull run, or is there the possibility that this coming week's bar may begin to put in a lower high on the weekly chart? So I am going to be fully focused on the weekly chart, guys. So here's your pullback into the weekly 20 SMA. And if you look, we've never had a time where we get a lower high on the weekly chart and then a lower low. So we haven't had a signal to roll over in a very long time. And in fact, we didn't even get one back in March of 2020. It was just kind of straight down. That doesn't mean there weren't other signals. There were, and there are ways to spot them. But at this moment, I'm looking for this push up to, let's see if we can first reclaim last week's highs. If we can get above last week's highs, then I want to start watching dips. Do we start making higher lows and start to, form a base for us to finally get some footing and push back higher? Or do we put in that lower high and then roll back over and break this week's low or last week's lows? Then, if we get a lower high followed by a lower low on the weekly chart, I will definitely be starting to go into protect the capital mode, because this 20 on the monthly is where we could go to, and it's currently at 36.40. So that's quite a bit of ways down. Again, don't think of me as being Chicken Little right now. The sky is falling. I'm not. I'm just preparing for different scenarios. So we got the pullback. We've had a great bounce so far. We've held some levels, and we are starting to see us push back up. We got even the higher low on the daily chart, and then we broke back above these highs here, and it's starting to push back up. And you'll see the same thing on the NQ2 when we get into that. So I'll actually save that kind of those notes for that chart. But as far as levels for this coming week, the bulls are really going to want to protect this 4,400 level, where you got the quarterly, the monthly. If they can't hold that, we still have that 43.64, I believe it was, this level here from back in late July. I believe that's still going to be a significant level. And I don't think we're going to just roll right back over and just that easily lose last week's lows this coming week. But if we were to, that's probably not going to be pretty. So 4,400, then 43.64, and then last week's lows are the levels of support. The bears are going to probably put a good fight up at the 20-day, which is also the monthly up there. And then you also have the quarterly pivot up at 45.12. So that's the levels I'm looking for on the ES for resistance. Next, let's get into the NQ. All right, guys. So here is your NQ chart, the NASDAQ futures, and you know, one thing I do like to point out, when you see me draw trend lines on my charts, I'm not delusional enough to think that these are like written in stone lines. I use trend lines as guidelines. I'm not, you know, I think you're pretty naive to think that for whatever reason this line matters, but this one here didn't, right? Like, I'm sure there was a lot of technical analysis guys that had a line drawn here, and then we broke it, and what do? We resume back up, and then we broke this line, resume back up. So I don't use trend lines in that way. I use them as guidelines, but you do have to acknowledge when something pulls back to a trend line. So we have this one from the March lows of 2020 that come right up through these May 21 lows, and then we had this pullback here that almost to the tick, and we bounced from there. Not only did we bounce from there, but we put in this little pattern I talked about on the ES. You know, we get this low, a higher low, and then we broke this little intermediate high here. So for me personally, last week's lows on the NASDAQ hold quite a bit of significance, okay? That's all I'm going to say about that. That's a very important level now. It's exactly like the ES, guys. It's not the pullback that matters. It's what happens after. So we're trying to push back up. Will they retake highs, or are we going to stuff? There's a lot of resistance up here. There's a ton of overhead, guys. But there are some levels that I believe the bulls are really going to try to defend. One is going to be that quarterly pivot. Let's just call it the psychological level 15K, which is also close to the 50-day. And it's also like where this base was built that we kind of broke above. We've reclaimed that, so I think they're going to want to try to hold that. If they can't, you got the annual and the monthly down there at, let's call it, yeah, that's actually the one that's closer to 15K. Sorry, guys. This is 15, let's just call it 15.1, where that quarterly's at. But and then if they can't hold the annual and the monthly pivot there, they really need to hold last week's lows. If they don't, again, things could get pretty ugly. As far as where the bulls or the bears will probably show up to defend the underside of the 20-day, and then this 15, let's just call it 15,550, which was where that breakdown happened from, where this correction happened from. And I don't mean, obviously this is not the highs. When I say that's where the correction happened from, that was the low that was, these were the lows that were broke that started the correction. So then when we go and retest it, I'm very interested to see what happens, okay? So that's an important level. So that's the NQ. All right, and so next we move on to our Bitcoin analysis, which is just my way of looking at what the cryptocurrencies are doing. Last week, you'll remember, we talked about this, that if we broke above this 47.4 level here, that it needs to go and test these highs. And if it doesn't, and then rolls over and breaks this low here, watch out below. And sure enough, you know, when we cracked that level, there was like 3,000 points of downside follow through right after. That's why these levels are so important, guys, knowing your levels. And so far we've held right, you know, kind of the top level of this channel that we had going, and we're trying to bounce. But it's definitely got a lot of overhead now. You have all three of the major moving averages above price and starting to curl down, right? You see the 20, the 50, and the 200 all right there. There's the monthly pivot that it rejected off on Friday. Was it Friday or Thursday? Yeah, whatever. It's hard to say because these things trade 24/7. And then you have the annual pivot up there. So there's a lot of resistance overhead. You would like to see them start to hold some levels and then start to get some productive price action to curl back up and try again. If they can't, I think we may come lower. It wouldn't surprise me to test the bottom of this channel after if they do fail. So that's the outlook right now on the cryptos. All right, and so the next thing we do is come over here to barchart.com, do our quick little sector analysis. Go over here to stocks. You guys have probably seen me do this for a few weeks now, probably understand what I'm doing. Matrix, short term. And basically the things that stood out were energy. And if you remember, we talked about that last week, how I thought energy, as far as the ETF chart was concerned, has really changed a lot and starting to look a lot better now. And sure enough, follow through last week. And as well, you know, we had pointed out how materials and utilities had got hammered last week. And let's pop over to the ETS. Remember what we said about those was the notes on on the utilities and the building material, or the materials, was that they may be a bit overdone and that they're probably not a short just yet. They need to pop into some levels. Lo and behold, there's your bounce. We're bouncing up back into some resistance on the material sector, and the utilities kind of had that bounce early last week right into some resistance and then roll back over. So make sure you understand that just because something had a down week or it's a weak sector, that it doesn't necessarily just make it a short, right? You need to make sure things aren't overdone and ready to bounce in your face, right? And so same with here's the energy sector, guys. And sure enough, you know, we are really starting to put in higher lows here, and we broke above that 50-60 level that we talked about last week. And so I think that some of the energy names look prime. So there, I actually have one in the long ideas. We'll get to that. But again, it's more about knowing how to use your tools and knowing how to create a game plan for the coming day/week. So here's your sector analysis. Make sure you guys use your tools. All right, so right away we go right into the long setups, guys. And the first type of long setup we look for is strong stocks looking for continuation. And the first name on my list this week is COSTCO. Let me zoom in on that. So they had a great reaction to the earnings. As you can see, not only that, but it stemmed from a really nice long trigger as well, straight to the all-time highs. I will look to see kind of some opening weakness on this name. You can see that this quarterly pivot at 462.39 lines up pretty good with a 50% retrace, and as well as, let's see here, if you look at that action on Friday, that, you know, we had a bit of consolidation there. I would look for early weakness, 462 to 460, somewhere in this little range here, and be looking to scoop weakness on the open. Remember, guys, 7 points of range is the ATR on this name, and it's a more expensive name. That doesn't mean I don't want to be a part of this if this has a nice week open, finds some bids, and then continues higher. There's actually quite a bit of long names in this week's Sunday prep. They're gonna be dependent on what the market does. Everybody needs to understand that, and this goes for every Sunday prep, but it's way different. You know, it's so easy to just assume that when we're in the bull market and everything's nice and smooth. But when we have these big corrections that go a little bit further than people wanted them to, you get a little on edge, like, uh-oh, maybe we should only have short ideas. No, I think there's a lot of stocks out there that look really strong. If you want to have short ideas, which we will, there's some short ideas coming up, make sure that the charts are screaming short, right? I don't think anybody would look at this COSTCO chart and tell you that that looks like something you want to short. It doesn't mean that the long is going to work. The market's going to have to behave too, but I like this COSTCO chart. All right, so the next idea, like I said, guys, is right from that energy sector. It's PXD. This one trades decent volume and it has good range. And as you can see, we had a really nice breakout, you know, very nice flag that formed in a bust above it. Not only did we break above it, we came back, retested levels, and confirmed by reclaiming and going. I like to see this thing retrace right to that quarterly pivot, 159.75 off a week open, and look to see if the buyers show up. You can see a lot of price action history there at that level, and you know, it's also going to be right around that 61.8% fib level. And so PXD looking for a little bit of morning weakness come tomorrow to scoop this. AIRBNB is the next ticker on my list for strong stocks looking for continuation. This one, I don't want it up here, so it's not going to be a Monday trade unless somehow it really gets heavy. I think this is like a Tuesday, Wednesday, maybe even Thursday trade. I'm looking for this to kind of find some near-term resistance up here and give us a pullback. I want to be buying this as close to the 20-day as possible, but AIRBNB has just been on a tear lately. This pattern looks very, very similar to like Unity Software, PLTR, just these really nice bases that have been forming. We get above them and we start holding some levels. So AIRBNB's on my list. Again, it's going to be more mid to late week, but I will have it on watch, and I will have some alerts set for AIRBNB so I don't miss that trade. Next one on the list is DOORDASH, DASH. Again, I don't know if this is one I get on Monday or not, I'd like to buy this as close to the 20-day as well. Obviously, as the week progresses, the 20-day creeps up. So it may be something about playing against last week's lows. You can see the monthly pivot right around that 212.80 area. I would like to see this flush try to come back in and then put in some higher lows and give me something to risk against, because Dash, just like Airbnb, has just been on fire lately. It's just running away, and I think it's got a lot more to go if the market can cooperate. So I want to make sure I got my eyes on Dash. And the last one for this section is QS, QUANTUMSCAPE. You see the volume has kicked up last week, and we really have a nice breakout going here. I just want to get, I want one shot at buying this off that 24 to 24.70 level, retest this breakout area. The volume's there. Again, this might be one of those kind that if I get involved in it and it starts working and I can scale into it, I think I might have a day trade and a swing trade all kind of wrapped up in one here. It's going to depend if how it closes. The day I get in, if we close strong and I have padding, I lock some in for the day trade and I leave some on for the swing. But you guys can see this this is called 24.50, that mid 24 area, the monthly pivot, as well as the retest of the breakout area. I want to be a part of QS. I was wrong. There's one more on my list for this section. I told you there was a lot of longs, guys. This one's from last week, PLTR. It broke out beautifully. The chart still is intact here. You know, that deeper pullback than what I think we anticipated, that's what happens when the market comes in like it came in. This only came in because the market came in, guys. It's still strong. It reclaimed. You know, I want dips to buy. I would love the 20-day. I don't know if we're going to get it. If this thing wants to start pushing and have a trend day, I may look to just buy dips and get long and have risk against previous lows. This chart just screams that it's ready to go higher, especially the way it bounced back after the market came in, right? So I have PLTR on my watch again for a second week. I want to make sure I don't miss this one, PLTR. And that is it for the strong stocks continuation. Moving on. The next section we do is oversold reversion setups, guys. And there's only one on my list this week, and it's FEDEX. And, you know, I think if I'm really, really lucky, we might get a test of 200. I want 200. I don't know if we're going to get there because that's very, very extended. 200 would be a gift. You know, I would probably be starting to put some into a swing account at that point. If we flush emotionally, like we talked about earlier, if we flush emotionally down to 218 where the annual pivot is, I'd probably be taking a shot there, and, you know, I'll just manage risk. And if it stays heavy, I'll step out of the way and let it continue lower without me. Again, I want 200, but I will not hesitate to take a shot at 218 if it gets there emotionally. You know, the other way that this could be played is we start to turn already and we start to put in higher lows and give something to risk against, and then I may put the trade on as well. But FEDEX is the only one that really catches my eye as being oversold enough to be put on this list. I know you guys see this here. That was an old swing idea. I just leave those things on the chart just so I can always go back and remember what the ideas were or what plays we had. So just ignore that. This trade is completely separate and different. So that's it for the long setups. All right, so weak stocks looking for continuation, the first section of our short setups, guys. And the first name on my list is Target. Basically, what stands out about Target is that it really didn't participate in the market rally last week. When the market came in and found some strong buying and had a good bounce, Target didn't participate. In fact, it's just kind of lackluster, traveling down the 20-day. And I feel like if we lose last week's lows, this could roll over a lot further. We may even come down to this 200-day. We haven't tested that in quite a while. So I'm looking to make sure I'm there if this thing starts to crack. So, you know, the market pushed and this couldn't. So if the market's heavy next week, things like this that were not able to get any footing when the market was bouncing very well could become heavy. So I have an alert set right there. You can see it under this 239.63, I believe. And if we crack that level, then I'd be shorting pops with risk against previous highs and look to just join that trend. I don't really see this as the type of trade where if it spikes from here that I try to fade it off the 20-day. Now, if we were to get a big push up into the underside of the 50-day, I might fade that, but it would be a different kind of trade, right? That's just an emotional spike that I would fade just because it was unsustainable. The idea here is more of a breakdown of a level on a stock that was not participating in market strength. So that would be looking just for some weakness to fade and continue lower. That's the target idea. The next idea in this section is Caterpillar. And again, this one is just, I mean, obviously it's bouncing from the market, getting the bounce, but that chart is broke to me. I want to fade any kind of pop back into the underside of the 20-day, the monthly, or that quarterly. It's also the psychological level 200. I feel like Caterpillar's got a lot of work in front of it if it wants to get back to looking like a strong chart. Right now, that chart's broke. I want to fade pops back into that 200 level. And the last one on this list is ROKU, and it's just because I hate ROKU and I love to have it on my short ideas list. Guys, this thing is behaving very, very well for the bears, right? Breakdown, pop up, stuff, come back lower. Any pop back into the 20-day, I'm probably there, 335-ish, let's call it that. You have that quarterly pivot. I don't know if we get up there. I feel like the way that it behaved on Thursday, Friday has a lot of people kind of stuck, right? Like people probably bought that on the gap up. It was a nasty day of price action followed by a gap down. If this thing were to open up, sub 316, I might just be looking to short pops right off the open and see if it wants to trend lower that day. Roku's chart is broke, beyond broke, okay? So now, what would not be something I like is if we get back above 340. If we get back above 340 before going lower, then I'm probably not interested in this, because what will that look like? Well, it'll look like a low, a push up, a higher low, and then we're breaking, right? So that could be a reversal. I don't want any part of it if we're back above 340. That is the Roku idea. And the last section is overbought reversion setups, guys. And there's two. It's CF. And you're probably going to think these don't look like the normal ones that Ricky shares. You're right. They're not. But I still like these because they've had such big moves up and they're going into some very clear-cut resistance levels. And I feel like if we slam up into those highs without having a decent pullback first, there's a high probability of a fade up there before it can continue higher. So I like the all-time highs, 57 to 58 area for a short on CF if it pushes up there without a pullback first. So Monday, some sort of like weak open, kind of curls around and then goes, probably not interested. We gap up and go straight off the open into these levels, CF's in my crosshairs, okay? That's CF. And the last idea for this Sunday prep, I know it's been a long one, is EXPE, and it's the exact same idea as CF, guys. If we just can any sort of gap up and go right into this 178 to 180 areas, I feel like we're going to have a pretty good fade for at least a few points, right? And, these ideas are not the old like overbought reversion setups like you saw on mRNA or a few others that we've had that were like A++ and bigger picture. This is not bigger picture. This is slam up into that level. Let me get my few points, my piece of the pie, and be gone, because I like to just go hit the golf course and enjoy my life. Remember, guys, do this for the ability to live the life you want to live. Don't live to trade. That's it. That's the Sunday prep. I'm sorry this one was so long. I hope these ideas play out. I hope you guys are able to capitalize. I hope you guys check out TrueTrader.net. I hope you guys check out Method and Mindset. I hope to see you guys at the market Monday, ready to FSU. FSU, baby. Peace.